Hello, how do I know if a trend is strong or weak? Well, I don't. Let's take GL for instance to analyze. Today is February 24, 2026. Using Thinkorswim platform and maximum daily chart. Let's look at GL. Because of the strategy I'm using, which is long uptrend long swing trading strategy, if I want to buy a stock, I wanted to know where I would want to buy and just keep my eye on there. So I choose using long uptrend long swing trading strategy. I choose uptrend line passing by the higher lows of the chart. That coincides with the valley of the chart or the valley of the mountain, because when the chart is swinging around, it's making mountain and valley. As it goes up, it will make a mountain. When it comes down, it'll make a valley. So therefore, I choose the valley to be where I want to enter the trade. Anything happen between the top of the mountain and the top of the mountain and the valley, I don't pay attention to it much. So therefore, it's within that area that you will see um, a weak strong. By that I mean like a temporary one. So for instance, when we take a look at GL again, I'm explaining it based on the way I view it. When I take a look at GL, yesterday it closed on red. The price at the end of the day was lower than the price in the morning when the market opened. The price dropped. However, even though it gives you the impression that the price is going down, the price is still around the top of the mountain. So I cannot see this drop here and say the price is pulling back. It's a temporary one. I can consider this a weak trend, for instance, just like this going up here didn't surpass all-time highest price before it pulled back down. So this trend going upward is weak one. But again, looking at this drop here is a temporary one, because it could turn around and start going up again. If it's now really going up, it's still close to the top of the mountain than it is close to the valley land that I like to enter the trade. So therefore, I'm not going to buy this stock. I think there is a line here and then there is one here. Those are the two areas that I'm okay entering the price, entering the trade, not knowing exactly which one is going to be the valley line for it, because temporarily it can drop quite a bit in a short period of time and then climb back up. So I'm picking those two where I have multiple touch point on this one to be where I'm okay entering it. If I buy here and it drop lower, I might buy some more and then just let it be in my portfolio negative until it's ready to start going up and surpass where I pay the highest price for it. But until then, anything above it is a weak trend for me to enter it. I want to see a pullback to this support line before I make my first purchase when it comes to GL. And as for this drop here, it's still close to the top of the mountain than it is to the valley. So therefore, it could turn around and continue going up. As I'm looking at the bottom of the chart, those higher lows from here, because I'm not seeing any green yet there, I'm not going to consider that. But when I'm looking at those lows, I have this one higher than this one. Even this drop here, it has a green bar. I can go with this But if a green bar is even lower, I like to just pick it. So this bar, I like to, when I'm talking about low, I focus on the red bar. But if I have a green bar right next to it that is lower, I will just go by that. So this low is higher than this low, which is higher than this one, which is higher than this one, which is higher than this one, and so forth. So when let's go back, I'm just looking like this. When I'm tracing those, I like to connect it with an existing support line. So if I'm tracing it from here, for instance, I could trace this line, connecting those obvious low, the bottom of the V, targeting the first one close to this one, and then see if any other lows can touch point with it. And that is giving me that. And I can just say that is claiming this support line is still going up. But whether it's down going up and is rate going down, I don't know. There is a temporary drop here going close to this support line. It will continue to touch going to it, touch it, rest a little bit there, and continue going up. I don't know. I will just keep observing it because this is my target point to enter the trade. If I have the stocks in my portfolio and I'm waiting to sell it, then I will be thinking about selling it depending on how long it has been going up. But I will have to go to maximum monthly chart to see if I can see a previous pattern similar to this that I can rely on. And looking at this area here, this cycle where it left this support line, touched point with a few times and then came back to it. It happened between, let me see, 1, 2, 3, 4 years. We have the dates on the x-axis from the past to the present and the price on the y-axis from $0 up. So we have 4 years time frame here. Let's see, it didn't exceed this all-time highest price until here. So those are temporary. So the cycle began here and ended here. So 4 years time frame. So it could, if it's going to repeat this journey, it could do it in 4 years as well. So we are 2 years in, that's the third year. So it could continue going up for a while. But I would prefer, since it's already reached all-time highest price, I would prefer not to get in the trade, even if it's going to continue going up, for another year or 2 years. I would just prefer to wait on it. So that is how I analyze the chart. Therefore, I don't really ask myself if a trend is strong or weak. I just view it like, is there a pattern that is repeating here? And I'll try to look at the past to see if I can find a repeating pattern. If I can find a pattern here that I can see if it's trying to duplicate that pattern, and I can rely on it to make my buying and selling decision. That is how I analyze my chart when I'm using long uptrend and swing trading strategy. And when it's swinging around, whether I know it's down going up or down going down, I just prefer to just buy at the value line when it touch point with it, knowing that it may now start going up from there. It could pull back and go a little bit lower than that. Like last year, when it touched base with the value line and start going up, and I have few higher lows, looking for an indication that is done going down, that trend ended, is ready to start going up, I will wait to see about 2 or 3 higher lows before I enter the trade. But for many of those stocks, it could go up for a while and turn around and go back down for a while before getting ready to go up, or you might do it multiple times before it'll be ready to go up. And as I pay attention to where I enter the trade, I'll notice that by waiting for a few higher lows to, to make sure going down through and ended, it start going up. I end up paying a higher price than if I just buy it at the valley line and just let it be, knowing that it will take few months for me to be negative in it, as if it's wandering around the valley line. When sometimes I might be positive, sometimes I might be negative, depending on which direction it's going, until it's ready to go up. So for 2026, I decided that when it touch, I just need to know those valley lines that I'm willing to buy at, the price along the valley line that I'm okay buying it at. When it touch base with it, I can just pay. I can just buy some share. If there is another valley line below that there is a chance it might go to, I might split how many share I want to buy, or how much money I want to use to to buy the shares. I might split it in half, buy some, and when it goes back down to the next valley line, I might buy some more. If it does not go there, it start going up, then I know that I didn't miss the entry, if that makes sense. So with that in mind, I just continue. For this year, I just wait and buy when the touch point with the valley line, or if I catch it late and the touch point is start wandering around whether it went down, which will be my buying zone, or it's a little bit up but still around the valley line, I will buy some share. Whether the trend is strong or weak does not really matter to me. I just trying to see, is there a pattern here that I can find in the previous cycle. By cycle, I'm talking about when it touched base with the valley line and went up to all-time highest price and then come back down to the valley line. I'm using that period between valley to valley as one cycle. So I'll try to look at the previous cycle to see if I can find a pattern there that is trying to reduplicate, and I can use that to analyze the chart. And within that pattern, I might see that when it touch base with the valley line, it wander around. So maybe I might decide not to buy it right away because it might wander around. Or if I don't have money to buy it, I might decide that, well, I will continue saving money for it because it's going to be there for a while based on the past what it did. Or when it's all-time highest price and I want to sell it, I'll look at the past to see how long, how many years it continued going up after it reached all-time highest price for the first time leaving the valley line. And I can decide that, oh, if it went up for 4 years, there is no point for me selling it after it reached all-time highest price within the new cycle, because it could do that for a few years. So those decisions, I like to find those stocks that that have tendency to reduplicate their cycle, so that I can rely on the past movement of the chart to make my buying and exit decision, knowing that it's not going to reduplicate the past exactly in the future, but close enough. So thank you so much for watching our videos. We thank you for your time. Thank you for all your comments, and we thank you very much for subscribing to our channel. I'm Afiavi Liberman, Kudos of Liberman Consulting L.L.C YouTube channel, and in sub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to reach that goal, but it can take a while. So that's why it's good to start now and little by little get yourself comfortable interacting with those stocks, buying them, selling them, so that a little by little you can grow your account and be ready to count on that stream of income as a secondary source of income for you in case you need to tap into it. Thank you. It could be to pay your children college education. It could be um, a source of withdraw to pay for a vacation. It could be to pull money from there for a down payment for a rental property, or it could be for your retirement whenever that time you are comfortable, retiring. So again, it's good to have different source of income, not just one from your job, especially if that job is not your parents that own the business. Even if your parent own a business, they could still fire you if you are not doing as they want you to. Unless that business is not yours, you could still let go. So therefore, as when you have that job, will you please try your best to use a little bit of that hard earned income to put to work. Swing trading is one of it. If you are busy with your job and you cannot, have a business, a side hustle on the side that you can invest in, maybe trading stocks might be more your alley, because again it's a little bit more on the passive side when it comes to side hustle business. But having multiple source of income is the key. But you can start one at a time, or you can start multiple at a time, whichever works for you. I just find swing trading to generate income for me quicker than my side business. But again, when I evaluate both, when it comes to trading stocks, I put in more of our money, less of my time. But when it comes to our business, I put in more of my time and less of my money. So I have more return from the from trading stocks than I have from the business. So for more videos in this series, please check the playlist how to start swing trading step by step using long uptrend lines, and more videos related to swing trading. We have playlists for them as well. And again, talking about side hustle and talking about stocks, when it comes to the stocks, I'm putting in more my money. But when it comes to the business, I'm putting in more my business degree. So my skills and my time, I'm spending more of that on my business. And when it comes to the trade, I'm putting in more my money. So I can't really compare the results I'm drawing from both because yeah, they are not comparable. So thank you so much for your time. Happy swing trading.